Hello, everyone. I'm Sameer Kalra. I'm the co-founder for PumPumPum.
Hi everyone, myself Tarun. I am founder, CEO of PumPumPum.
I remember as a kid that my father was interviewing for a senior position in a five-star hotel chain. And one of the perks of the job was a company car. In that era, a company car was the ultimate middle class status symbol. Back then, I did not understand how this whole thing worked, and I assumed that a company would just buy a car and give it to the employee. But the way this actually happens is through a fintech play. When a company gives a car to an employee, it actually leases the car as an asset and pays a monthly subscription for it to a corporate leasing company. The corporate leasing company is essentially lending money in the form of a car and earning interest on the loan in the form of the monthly subscription. Corporate leasing is a fairly well established business because for an employee, it is a very tax efficient option to opt for a corporate leased car. But this never really took off in India. In this episode of the Founder Thesis podcast, your host Akshay Dutt talks to Tarun Lawadia and Sameer Kalra, founders of the car leasing company PumPumPum. PumPumPum is building up a car leasing business for India. They have taken the fundamental car leasing model and made some significant tweaks to it so that it finds product market fit at scale in India. And in this episode, they talk about getting the timing right, making use of technology as an enabler in an essentially ops heavy business. Stay tuned for this fascinating conversation and subscribe to the Founder Thesis podcast on any audio streaming app to learn about building solutions that scale in India from leading founders of the country.
I started exploring finance industry. So I found interest around the trading ecosystem, how the stock market and global ecosystem, what are the factors, how these things play, behave. And I found a good interest. So I think in my third year of my college, I participated a competition around a virtual trading conducted by one of the, I think, India's leading prop trading firm, Future First. So they conducted a trade Mughal kind of competition. So I got selected in top 50 and I received a pre-placement offer from that company. So after completing my graduation, I joined Future First as a fixed income trader. I used to trade fixed income market mainly in the US and European region. So during my college time also, I was sort of involved in couple of startups, wanted to create some basic problem statement and wanted to create some solution for the consumer for some B2B basis. So I think there some angle of startup was there in my mind. Our trading was also quite a startup kind of experience because you are solely responsible for your personal P&L. So I spent 2 years. I actually came from a poor middle class background family. So basically, money was some first angle that I wanted to clear out in terms of my personal loans, my father debt, and those things. So I think 2 years that gave me a good opportunity to sort of become stable and do something on my own. And that was the time I was sort of confident to take a risk. So 13, I joined Chayos as their founding team member. Chayos was very early, couple of outlets only. Chayos I just opted because of my some personal interest in food, beverage. Like I'm an enthusiast around cooking and those kind of things. So I joined Chayos. Knew nothing apart from what kind of work I'm getting into. Founder who is Nitin Saluja. So he's like, yeah, okay, you can go for the operations kind of background, which always need a person where you can manage a lot of people. People background could be from down labor kind of people to a very senior kind of people. So that's how I got myself into the operational background. So during my Chaiwas days, I was responsible for setting up of their outlet, supply chain, basic operations, in-store operations, kitchen to supply chain, those kind of things. I think after 1.5 year, my major understanding that I wanted to gain from the Chayos is to learn how to scale a business, how to start a company, how the startup ecosystem behaves, how do you raise money and those kind of things. So after 1.5 year, we raised money from Tiger Global. So I was confident enough to move on and to start something on my own. So 2015, I co-founded a company called plusapp.com, which was into online medicine delivery space. We raised $1 million. We expanded our operations to Hyderabad, Bangalore, Delhi, NCR. And it was more of a hyper local play where we enabled all the retail pharmacy stores and created a supply chain where end user can deliver medicine within like 30 minutes. So that was our initial idea. I think 2015 we got ourselves into the same market shift where people from GMV started questioning about GMV approach and focusing more on the profitability and unit economics. So for us to pivot to scale our business with a new approach, needed some good amount of funds. I think that is where then we explored options of merger. So we received options from a couple of industry leader and we got acquired by NetMed. So we sold our company to NetMed.
How was NetMed's model different from your model?
Yeah. So NetMed was initially delivering their entire medicine from single warehouse. That was Chennai.
So they were like inventory led model.
Yeah, they were inventory led and against their competition, which were like Farm Easy 1mg, which were more of quick delivery play. So I think NetMeds was struggling to deliver same day delivery in lots of major metro cities.
And the Farmizi and 1mg, are they also inventory led or?
So 1mg that point of time was a mix, I think a mix of inventory plus a partnership model. Farm Easy was purely, so basically Farm Easy started a more backward integration where they initially onboarded a lot of retailers and wholesalers. And they also created a forward play where they onboarded a lot of retail pharmacy and they used to deliver their medicine from those channels, but they used to refill their inventory, refill whatever they consume, and they used to give them some incentive. So that was a very good model. I think NetMed was pure inventory-led model, delivering pan-India from single warehouse. So we created a pure inventory-led play only at NetMeds, but we created a hub and spoke model. So we created a lot of warehouses. So we created two mother warehouses. One was in Chennai, another in Delhi, and then we created sub small warehouses in Hyderabad, Bengaluru, Kolkata, your Mumbai, and those areas, so that all the metro cities can get their medicine delivered on the same day, and the remaining areas can be fulfilled at least in 2 to 3 days.
Do you think you took a wrong call of being an aggregator instead of owning the inventory? Like you were essentially, your model was aggregator, right? Like you were.
So when we started, we used to share the same co-working place. So Grofers, founded by another IIT Bombay senior, Mr. Saurabh. So Saurabh Saluja. So we used to share. So four of us used to sit in the Grofers team. So Grofers was one of our initial B2B partner of Chimes. Then Grofers pivoted their model of this hyper-local play and delivering groceries through their approach, and they received a good amount of funding. So the hyper-local was something at that point of time.
Flavor of the season.
Exactly. So basically, and when I was exploring new ideas, so my other co-founder Atit, so they were like, "You're okay, our medicine is something which gives a good angle, and online pharmacy is something again where a lot of people are putting their money in." And I saw the hyperlocal play, how Grofers pivoted, and how the Grofers from inventory to aggregator model. So I said, "Yeah, why not apply the hyperlocal thesis on the pharma vertical?" And that gave us immediate funding. So this entire thing, along with our team, everything we received, I think couple of months we received our first $1 million funding. So but I think immediately suddenly that 2015 the sentiment shifted from those GMV approach to profitability. I think we got stuck in that phase, and eventually for setting up an inventory led model you need.
And and at NetMeds, you were largely like in a COO kind of a role, I guess, like looking at operational efficiency.
Yes, so I was responsible for operation and supply chain at NetMeds. So my initial role, so I almost spent a year at NetMeds, majorly to set up their entire supply chain. So I set up warehouses across different cities, enabling new supply chain efficiencies, which can bring that competitive edge along with their competitors. So I think after 1 year, my major job was done. And then again, I wanted to explore. So I learned a lot of things from understanding or being into the operational background. So I've always taken up those kind of challenges where to create something, you need to be strong on the operational front. The technology becomes enabler. So my background comes from that angle. So I was not a tech oriented kind of a founder. I wanted to explore those kind of problem which people are not able to solve just by technology. And there are a lot of operational bandwidth or operational efficiencies required. So after NetMeds, I joined a startup studio called T9L as a resident entrepreneur to provide consulting support to some of their portfolio companies in healthcare space, in food tech space, but mainly buying some time for myself to explore new business ideas. So I think that was initial. Used car was never in my mind because my understanding of used car is that point of time was that a lot of people are already into the used car market. There are old age players like Car Nation, Mahindra, Maruti, these kind of players, then Car Dekho, Car Trade. Lots of people are there. So I was working that point of time more in the organic farming space. My idea at that point of time, I was working more interested in the organic farming is again where the technology is one angle, but the operational challenge was there in the farming or the agriculture ecosystem. And I wanted to build an organic layer which creates a D2C brand play of organic goods, which can be directly delivered to the end user. So that was the idea I was working. I think used car as a problem came very interesting naturally to me and also made a good sense to my entire personality and entire sense. I found this is one of my friend over there at T9 was looking to buy a luxury car that point of time. And I was in the idea that car you can easily buy from any. There are a lot of marketplace. There are a lot of Spinny was there at that point of time. Cars 24 was also there. A car dekho car wale OLX. So I thought that buying a car should not be a problem. But I found a lot of challenges, issues, even when I was personally when I was helping my friend to buy a car, I found a luxury car of a value of a 20-25 lakh and nobody's giving me any kind of warranty. The luxury car at that point of time nobody was addressing. And even someone who is willing to spend a 20-25 lakh rupees, outcome was very not supporting from the consumer perspective. The warranties were then not there. Financing of luxury car, no bank were ready to fund a used luxury car. And then what confidence you are getting into a 20-25 lakh rupees transaction, and maybe after 1 your car can give you a lot of trouble. So that was the idea, and then it was a surprise to me why there are no options which gives me a single platform to own a car without worrying about all the hassle. I'm ready to spend big amount. So that was the initial problem, and then I started researching about the used car ecosystem, and it met the same criteria. A lot of people invested a lot on the technology, like car deco, car trade, all these play a lot on the technology, but the outcome from a consumer perspective was not there. In terms of warranties, in terms of hassle-free ownership, in terms of financing, a user is purely relying on his own or the dealer partner who help him figure out a car. Maybe the organized player till date, they're more of a discovery platform. So they'll give you a car with a basic warranty of 6 months, that then help you get a finance from the banks. But banks are not in their control. Banks decide which car they want to fund, which car they don't want to fund, what is the LTV, everything as per the bank understanding. After 2 year or 3 year, when you're done with the car, then again reselling, you have to go out C2C platform or OLX Cars 24, you sell your car. So if you look at from a user journey, the the entire responsibility of car management, maintenance, all the risks associated with the car remains with the user only. So that was the idea I found. And then I thought, yeah, one big observation that we identified in the used car, that the average ownership of a used car is reducing. Currently the average ownership is only 2 years, and new car ka it's 4 years. So our thesis was very clear that if the average ownership is only 2 years, then why should a person buy a car? I should technically own a car for 2 years. Someone else should take care of everything in terms of car quality, service, maintenance, purchase, financing. That was the idea. And then I got to know the leasing play. And then we found that in India there are a lot of leasing companies, but they are only limited to new car. And that again gave me a surprise why nobody is looking at a used car. And then we found that all the leasing companies, majorly globally owned companies, so they come with their global mandates, global SOPs, that they have a fixed proposition. Leasing only B2B, limited to top blue chip companies at all. So that was the initial thesis I found. So I started PumPumPum in mid 2018. Initially, with the idea of creating a subscription around the used car, and first concept level understanding, we wanted to create something where the end user can simply get the car delivered. So we wanted to do a POC. So we took a debt, family friends, 25 lakh. Then I took some debt from the bank, and then I think we delivered some 20 cars. And then I was confident enough that okay, this model has clear cut validation and clear cut demand from the user perspective. And mid 19, we full fledgedly roll out the PumPumPum subscription play. I think December 19, I think once we secured the first round of funding.
Wait. Let's get Sameer into the story first. Because by this time,
Exactly. So December 19 is where I met the Sameer actually. So then yeah. So Sameer, please.
so one request, Tarun, your phone is ringing. So if you can Yes, yes, Sameer. Yeah, tell me your origin story here.
Yeah, so I've been born and brought up into a simple Punjabi joint family in Delhi. Typical 1975 is the model that I am. So it was simple Punjabi family, a joint family. Everybody was into service. Never anybody had ventured out into business. So I went to a school called Springdale, which is in Dolacoin. Did my schooling from there. Went on to do my graduation from Delhi University in economics. So I'm an economics graduate from Delhi University. Did my MBA. It's a simple lifestyle. Started working way back in 1999. Initially, 7 to 8 years were in training and consulting. So I worked with companies like Hero Mind, which is part of the Hero Group, but yet into training and consulting and not typical manufacturing as the Hero Group is known for. Then worked for a company called NIT because at that point in time, computerization was the mainstay, right? Everybody was wanting to get into computers. So kind of did some, and I've always been into sales, right? So 2007 onwards, I joined the auto lease industry, and since then have stuck to that industry. So I've happened to work with the world's largest leasing company, which is LeasePlan, in various capacities for 8.5 years. As Tarun, leasing has been prevalent in India since 1999. However, still in 2007, the challenges were huge. I mean, people never understood what leasing is all about. So either people knew an outright purchase of a car or they knew taking a bank loan. There was never a third way of owning a car. So leasing was something which was very new. The few challenges which we faced initially to actually train the market or to educate the market about what leasing is all about. So we did that around 2015. I moved on to a company called Avis. Avis is part of the ABG group globally, US, which is in almost 160 countries. And in almost 55 to 60 countries, they also run an auto lease portfolio. So I was heading that as part of the management team. That kind of made my understanding very strong around the leasing thesis because I got to know the 360-degree view of how the business looks like, both from the operation side, finance side, sales side, structuring, and various things that are required to build a business around that. That was around 3.5 years. Then moved to a company called Clicks Capital. Clicks Capital is an erstwhile company of GE. It's erstwhile GE Capital, promoted by Pramod Bhasin and Anil Chawla, both founders. So there I was part of the organization as vice president for automobile business, looking after used car leasing and used car loans.
So you're saying that used car leasing already existed?
No, so it was used car loans and new car lease. Told you, most of the organizations have only stuck to new cars.
Only we to corporates, right? I don't think as an individual I can get a car.
Absolutely. It was a B2B. However, used car loan was more to the individuals. It was in the retail, but corporate was the way that auto leases were sold in this country. 2019, call it mid-age crisis. I completed 20 years working, always wanted to do something on my own. And because of my last experience, knew nothing apart from auto lease. So my last 12, 13 years during that time were already spent in that. And I was very sure to start something in that region. So that is where I left my job, started consulting few people. So I've consulted Car Dekho for a couple of projects. I've consulted Rev. They're into car subscription, just like Zoom Cars. Happened to consult them for some time. And that is when I and Tarun met. The idea was astounding because all this while that I've spent in this industry, people have been asking this question that why can't you provide me a used car instead of a new car, if I so desire? And if you also look at it, Akshay, the market for used car is almost 1.5 times the market of new cars in terms of number of units. Yet there has been not a solution to provide this. And Tarun and I discussed it at length. He already had a few cars which he's already done. There was already proof of concept. I wanted to start something on this own, and that is how we got together. And I've always had a flair for only growth, looking at various partnerships. Tarun had his hands strong in operations. So I think it went out to be a perfect combination for both of us to really build PumPum.
Why is car leasing offered only to corporates? Is it that the underwriting for individuals is difficult and hence?
It's one, the underwriting criteria. All the leasing companies that you've seen today, all large names, have their global headquarters. They are very risk averse. I mean, they would want to not go into the retail market. That's one. But having said that, Akshay, even if you look at the retail sector, despite having a huge demand for new cars, leasing really doesn't work because, see, leasing thrives in a situation when there is a risk of ownership. In a new car, typically there is no risk of ownership. So banks will give you loans happily.
Risk of ownership? What is that?
Risk of ownership is when you are not clear in terms of what am I going to spend on the journey of this car. Right. So if you take a new car today, all the OEMs are giving you back-to-back warranties. Banks are giving you 100% funding. Most of the OEMs are also giving you a buyback guarantee, which means whatever was supposed to be a risk on ownership, OEMs are already doing. Why people chose corporate route is because there is an additional benefit of tax. So it is tax friendly. So it went through the corporate route, and it was, from the underwriting criteria, very good for these leasing companies. But used car was very different. There was a real risk of ownership. It's like a black hole. So we always say buying a used car up till PumPumPum came was like walking into a hospital without health insurance. So it can go either ways, right? So you can buy a good car, you may not buy a good car. So it's a risk. So that is where leasing fit very well fits.
So, what was the model like? How did you price it? Like you did a pilot, so maybe you bought a used car for 10 lakhs, and how did you price it on a monthly basis? What was the? I mean, just tell me about that, like the details of that pilot.
Pilot was very simple. So we did a very simple say, initial some customers who were interested in the idea. So they were very simple approach. Okay, let's say if I buy a car of 5 lakh rupees, after 2 years, the market, I'll be able to fetch, let's say 2.5 lakh rupees of the same car after 2 years. So they know, okay, 2.5 lakh is the depreciation cost that I have to pay for the car. And then obviously for let's say the duration 2 year, you will do a two insurance, annual insurance. Basis your kilometer, average kilometer understanding for 1 year, which is around 10 to 15,000 kilometer. So there is going to be a three schedule surveys, basic. So we factored in those simple costs and the depreciation cost along with the interest component. Okay. So for example, if you take a loan on a 5 lakh, then obviously you will pay interest on the total 5 lakh amount. Here, what we are saying, okay, the principal recovery is going to be of 2.5 and the interest cost. So, putting up all these costs together, that was the simple approach for the customer. And for the retail, we used to give him a cost comparison. Jahan pe there is going to be 10% cheaper when they opt for a subscription or leasing. Because of our involvement, we bring the economies of scale into the play. Whatever cost that a customer as individually is going to pay, our cost is going to be way lower. You take it from the procurement. If you're buying a car as individual, obviously at a scale, I'll buy the same car at slightly lower price. The service maintenance is going to be lower, the financing is going to be lower. So we make our money out of those margin that we create and we pass on the benefits to the user also. So the user clearly technically it's a cost effective and without any risk associated.
What is the product for a user? He gets monthly, like all maintenance is your headache. What about fuel and all? Just describe the product. Who pays for fuel? Who pays for maintenance? And like, just
So actually, the entire lease rental that we're talking about, monthly EMI covers your insurance for the entire tenure. It covers your maintenance, tires, batteries, scheduled maintenance, unscheduled maintenance. It also covers certain value-added services like pick up and drop, which means whenever you want to send your car for service, our chauffeur will go pick up the car and drop it back. So these are the value-added services which are all bundled. All you need to do is fuel it according to your mileage and drive it. So as they say, fill it, shut it, forget it. It's typically that model. Wherein apart from fuel, because it is dependent on his usage, which is also obviously designed upfront, that is how the pricing is devised. However, the fueling and rest, everything is left to us to take care of.
In our costing, we always factor in the costing from an average. So obviously, there are some cases, a 10-20% are going to be some rash driver, there are going to be some those kind of driver, but we have a very clear cut wear and tear policy, like in terms of usage policy. So you can't use these cars in like rallies or some adventure, those kind of thing. So the end use case is defined.
does a good driver and a bad driver pay the same? Because the maintenance cost would differ according to quality of driving.
So generally, the uses are defined in the contract. For example, you want to take a 1 year 50,000 kilometer. Now there is a guidelines of vehicle usage. So for example, what is covered? So there is like a minor scratches, a regular uses are technically covered in all the scenario. But anything which gives an indication because of abusive usage. Maybe for example, you drive a car in that way. If a brand new tire gets totally out in 5,000 kilometers, then obviously there is a directly relation to the user driving. So those are the additional corner cases, worst scenarios are defined in the user's policy. So if a regular driver is driving the car in a regular way, technically nothing to worry about. But still, average users, because in India, it's not something like the roads, those are the things. So we have already factored in those kind of costs in our maintenance package. So 99% of the cases we don't have to worry about.
So, end of 2019, you said you did your fundraise. How much did you raise and whom did you raise it from?
So first, majorly from the syndicate platform, we raised 2.5 crore through Let's Venture mainly, and then 1 year later, then we raised follow-on subsequent round. The first round of funding was through LV and some group of individuals that they onboarded. I think there were a lot of business-wise, strategy-wise things that evolved after we reached the money. The first round of funding, whatever the idea we had, the way we wanted to scale this kind of business, we faced a lot of challenges. I think first round of funding, I think 3 4 months, we faced the COVID outcome, and the COVID in some ways supported this kind of business play because a lot of demand for the personal car started after the COVID scenario. But the challenges were more on the demand remains always high in this business model. The challenges were more on the financing side, the fintech side. How you are able to fund, let's say if I have to buy 100 cars, then obviously you can't use your equity money to buy the 100 cars. And that is where I think our initial effort started. I think first we were able to convince ICICI Bank, shown confidence in the model, and they funded our initial line of money. But then banks will always come with a limited scope
Does
of
a
exposure.
bank fund individual car? Like, would ICICI give you money for every car you bought? Like, they would ask you to submit documents for each car?
So overall assessment, underwriting is done on the company base. They give us a revolving credit line. However, the documents obviously is done on a car to car basis because
Car to car basis.
the underlying security is the car for the bank.
So, if you're buying 100 cars, then essentially you're getting 100 car loans from ICICI Bank in a way.
Yeah.
Yes.
Okay. You were saying that you needed lending or you needed lending partners to help you scale.
So ICICI came on board. Then we initially thought, ki, okay, for a bank, it's a beautiful play. Because right now, when banks fund in a used car, banks generally treat used car as a risky category. Like, even though there is underlying security, but the delinquencies or the defaults are way higher than a new car loan. And what we identified that the majority of the loans, the default in the loans, not because of the credit behavior or the credit issues, they were majorly because of the asset failure. That people start showing default tendencies because maybe after 1 year my vehicle needs a 1 lakh rupees repair and maintenance. They know कि, okay, after spending this much of money, there is no guarantee that this vehicle will not ask for more money. And then there is a principal outstanding and those kind of things, which leads to a delinquency kind of nature. So we believed that when we are taking care of this entire service maintenance thing, then obviously the delinquencies are going to be way lower, and then banks should give us infinite money basis our demand. But obviously, when the banks don't work in that way, they will always leverage our equity versus debt. And then we started getting into that problem where our equity was like 2.2, and then obviously beyond a 5 6 year, no banks will going to fund the debt. So that is where I think we pivoted from asset heavy to asset light, and then we started now more working through a fintech kind of approach, because the more demand, I'm only able to fulfill the demand if I have the right supply in terms of financing. Whether the supply from the car purchase, those kind of ecosystem are well created. The demand is there both from the corporate world, from the retail world that we are catering. The biggest question mark is around the financing. I think the entire initial post-COVID, the asset light shift helped us grow 1000% in last financial year. So we created a model जहाँ पे
What is the difference between asset heavy and asset light model in your business?
So in our business, see, in an asset heavy model, the cars remain on our books, which means we buy, we take a loan and we give it out on lease. In an asset light model, we take a cars on lease.
For asset heavy, you need to put in like maybe 20% of the car value and 80% can be financed, something like that.
Initially, it was, but now over a period of time, when banks have also got the comfort of seasoning with us, we don't need to put in beyond 5% of the money for any car. However, having said that, when we take these cars from our financial partners on an operating lease basis, it basically means it is on their books, which is not on our books. We just value add and give it out to the end customer.
They would buy or you would buy and tell them, okay, this car I'm buying on your books.
They would buy basis our assessment. So we have the customer who looks at a car, we assess the car, and then they buy and they continue to treat it on their books the way they have to, depreciate, and we further sublease those cars to our end customers. So we become a light in the process.
So the difference is only that 5% of your own money that you have to put in between these two models.
Not only 5%, but also it makes us asset light. See, again, as you said, if banks were to fund me directly, I mean, there is a limit, there is a concentration of risk that happens, right? For how long can they can't fund me for 1,000 crores. But if I have multiple lenders at the back end,
Why not? I mean, you could work with multiple NBFCs and get 1,000 crores each one.
that's what we're doing. But it is a mix and match. So what means is if there are people who are taking the risk on their books or buying these assets on their books, my concentration of risk problems also gets sorted out. So if I tomorrow immediately need, say, 20 crores or 30 crores of debt in 1 month, a bank may not be able to support me. But yes, these leasing partners and these lending partners can support me without actually coming on my books.
Okay, so it's essentially like a mix, like these are different channels, and you want to maintain a healthy mix between different channels.
Absolutely.
Yeah.
Absolutely.
Okay, and what is the split? How much is where it is not your on your books, and how many of your cars are not on your books, and how many are on your books? Like,
Almost, I think 60 to 70% would not be on our books now. 70%.
So I think initial ones that we purchased were on our books, and there are some cars, some cases obviously because banks lines we can't deny the rates are better, and obviously the access with banks from a long term perspective is definitely in our favor. So we always, I think we believe it is going to remain in a mix of 60-70% remains asset light, maybe 30-40% remains with banks, which give a comfort and don't create lots of risk concentration on top of.
so your margins would be better when it's on your books, right? Because you would probably anybody who's taking the car on their books is earning that extra margin which you are having to bear then.
Absolutely. The margins are better. We get the benefit of depreciation as well. However, there is a limitation. But as he said, Tarun said, we've maintained a healthy mix and we want to continue that way, growing as well.
Okay, okay, got it. Tell me about your procurement process. How do you ensure supply of good quality inventory? I would say that in used, I mean, any used product market, it's all about supply. Like if you have good supply, then the demand is there to tap. So how do you ensure good quality inventory?
So if you look at our supply chain partners, we have almost all the institutional players thoroughly tied with us. There are these platforms, used car platforms.
What does that mean? Institutional player, like
Institutional players like OLX, Cars24, Spinny, we take cars from them. We also take cars from all new car leasing companies. But our criteria of assessment of these cars is very different from where a trader would assess that car. So, where a trader assesses that car, or typically a Cars24 will assess, is whether this car is good enough to be run for the next 3 to 4 months, and is it at a right value so that it can be traded at a better value. With us, since we are taking a risk for the next 3 to 4 years on that asset, the core assembly of the car is more important for us. Right. So we assess the car very differently. We have our own individual assessment criteria. There is also an assessment app. There are a team of inspectors who go out and assess the car basis the requirement that we have. So hence the kind of supply that we are chasing is very different from what traders are chasing. So for us, it's very simple that the car has to run well for the next 4 years, 3 to 4 years. The risk is mine. And that is what also gives confidence to my end customers that instead of they haggling for the right car, they have an expert who's going to take that risk. So it is in their interest that they get me a better car. So it works out very well from there. Apart from that, we also have a dealer model wherein all the large dealers can list their inventory with us, which is already pre-approved, which means these cars are pre-inspected, pre-approved, and can be offered to the end customer as a lease or a subscription. So this is the entire channel how we operate.
so. Help me understand this dealer model.
So you as a dealer, if you have 20 cars, we pre-inspect out of which 5 qualify for our lease program because the cars are good. Those cars can be listed on our platform wherein a person can come, choose, and there is already a price available. And the moment he says yes, we immediately go ahead and procure that car because we know where it is. So we run an inventory light model. Typically, we always run an inventory light model. We don't want to keep an inventory with us. It's just when the customer comes, we will buy the car.
Yeah, I agree with you. It makes no sense to buy in advance because each person would have their own tastes and preferences and what color, what model, and so on.
And actually, that's the basic difference between a car rental company and us. In a car rental company, you first have a car, then you hunt for a customer. And the customer has a very limited choice. With us, it's the other way around. I'll first have a customer, he chooses his car, and then we go out and hunt for the car of his choice.
So you're actually acting like a concierge for the customer. The customer would probably share with you his preferences, and then you would go out, identify, share some options with him. Tell me the customer journey. Like, what is the customer journey like?
So the customer right now comes to our platform. They give us the idea. So there are virtual cars. There are some dealer partner cars which are listed on our platform. User selects the car as per his requirement.
What do you mean by virtual cars? Like,
So virtual car, but the basically like so we list a 2015 Swift car for example. We will also list a 2018.
okay, which you are confident that you will get those cars. Okay.
So those cars which are commonly available in the market, plus the dealer real cars are also available on the website. User selects the car, simple, that give us a very simple token money in order to show the confirmation that he is willing to take the car on the subscription. There is a credit check, instant upload of his banking, and we run a civil check through Experian on user civil. So basically the combination of his civil and bank balance, we basically give him a confirmation what kind of car he is eligible to subscribe from PumPumPum. Once those two criteria are met, third step is very simple. He gave us a month security in advance, 1 month rental, and we deliver the car to the user doorstep.
And this entire process is done within 15 days, at best 15 days from the time he chooses to the time it is delivered.
Okay. So what would be the monthly subscription for, say, like a Swift 2015?
Like, so 2015 monthly shift going to be some 18, 90,000 rupees approx.
How does it compare to the EMI cost if, like, for a customer, like what is the maths for a customer? If a customer was to think that, okay, let me buy it and take a loan and pay EMI versus let me lease it, what is the maths for him?
If you typically look at a Swift 2015 will cost you around 4 to 4.5 lakh rupees in the market retail price, almost 5 lakhs. If the usage was to be say 12 months, because our product is available for 6 months, 12 months and 24 months. If you were to take a loan for 5 lakh rupees for at best 24 months, your minimum EMI that you would be paying will be around 25,000 rupees. And this is just the EMI that I'm talking about. Right. On top of it, need to get the insurance done. You need to get the repair, maintenance, and everything. With us, if the use case is only 2 years, he only gets to pay 18,000 rupees a month, everything included, buys that car, gives it back to us. End of 2 years, either he upgrades or he's going to another city, he can take another car. Everything is possible. He wants to extend the lease, extension is also possible. So, it's typically 10 to 15% lower than actually taking a car or buying it himself and then disposing after 2 years.
So here also there is a good मतलब consumer angle. Like Sameer mentioned कि अभी होता क्या है कि user actually go for a 4-year loan because they look at the EMI. अभी if I'm planning to buy a 5 lakh car, then I know कि okay, my monthly spending capacity is 14-15,000 rupees. Then what I will do, I'll do a 4-year loan or a 5-year loan. But average data of ownership says the user keeps car for 2.5, 3 year max. So the user actually passing on current problem to the future. Ki after 2.5 years, technically you cannot sell your car. The user look at the EMI that I'm paying 14-15,000, but after 2.5 years, there is going to be principal outstanding. And you can't sell your car. First, you have to clear off the loan. Then only you can sell the car. So that's the complication that people get into when they take a loan slightly longer to the duration, but they are actually planning to own. So the subscription perfectly meets the criteria of the usability, and you pay actually for the time that you are using the car.
The cost of ownership overall is lower through leasing than if you buy, maintain, and sell. So that maybe a 5 lakh car you will sell in 3 lakhs. So that 2 lakhs you spend over 2 years plus maintenance and all of that. So that will be higher, you're saying.
Yeah, well, three could be two also. Whether there could be major issues also. Whether you buy a 5 lakh car, we are assuming a normal scenario, there could be the used car market is a very grey market. When the meter back, engine issues, there are some issues which are very major. But at time of purchase, dealer just try to rectify those issues that they are not visible, maybe for 3 months, 4 months, but they will come in your life cycle. So those things also leads to your future price. It can be anything. So nobody is securing your pricing. So if you're taking a car for 18,000 for 12 months, then you are sure that even car needs an engine replacement. It's not going to go out from your pocket. Your cost of 1 year remains same.
Got it. I think essentially the biggest value add for a consumer, and if I was a consumer, would be the risk that you're taking off the table. Even if there is a price differential, or even if there's no price differential, but that risk is a big deal. Got it. And you raised another round in 21, right? How much was that? And
So the next round, then we raised around 6.5 crore. That was, I think, mid-April 2021. And we recently, I think, 4 or 5 months back, we raised a $2 million, includes equity and some venture debt put together. Yeah.
so what are the things that you need to unlock to grow 10x? Like what are those challenges in front of you right now?
So I think majorly was the financial partnership. I think now we are very confident with the kind of base ecosystem that we have created. The lending as a problem getting solved. And now the demand is not a problem. So we are both in corporate and retail. Right now we are only in two geography, Delhi NCR and Bangalore. So for even us to go at 10x, so that we can immediately start our services in Hyderabad, Pune, Bangalore, the other metro cities very easily. The demand is definitely there. Plus the corporate side is still holds immense potential because there is a clear cut precedence on the base level which already be established from the new car leasing company So all new car leasing companies jointly put together, they have an active fleet of 1.5 lakh car, and which is even because of their in a very I'll say limited scenario where the eligibility or the option available for car lease is only VP and above, like top 10%. Because of the long term requirement of 4 to 5 years, the adoption, even though there is a tax benefit, lease benefit, but the adoption out of those 10% still remains very low, not more than 10 to 15%. So technically, in the top blue chip companies, 1 to 2% is the lease penetration. What we have seen in our offering, companies are very comfortable opening our policies to top 40 50% of their employees, because that is where the entire used car ecosystem makes sense for larger audience. And there are all the leasing traditional issues that generally company face in terms of launching a lease policies. We have very much flexible, very much simplified our leasing proposition for the companies. So now even a well-funded startup can simply open our lease program for their employees, because it gives them a good retention tool for the companies. It's a very HR friendly or HR policy which they want to roll out for their employees. So what we are seeing, that companies are technically opening our policy to 40 50% people, and used car is something where usability is not long, 1 2 year. So demand is also almost 8 to 10x higher than what a new car leasing companies are having in the company. So these are the good channels. Plus, retail remains a very huge opportunity. But right now, retail basically because of our direct exposure on the user. So we keep our major focus on the corporate. So I think 70 75% of our current portfolio is through the corporate lease. 25% is the retail subscription, because the risk of default remains with PumPum. Okay, so there we only underwrite highly credible user, good salaried people only. But now we have some plans to create a model where simply the risk from can be spread to different lending partners. Okay, instead of we taking risk, people will take risk on the retail user, and those are some future plans that we are working out. But remaining with the corporate and the existing play, we are confident with the current growth rate. I think we will touch 10x maybe in a couple of years very easy.
So your corporate customer acquisition must be happening through like a sales team. How do you acquire retail customers?
So retail customers are through the digital journey. It's basically digital marketing, Facebook ads. Yes. Yes.
So a longest lease plan is like 24 months. What happens after 24 months to the car?
So the car, there are three options that the user has. Either he can surrender the car and move on. He can surrender the car and upgrade. He can extend the car. All three things are possible. What we have seen as a consumer behavior, almost 85 to 90% of the people whose leases have ended have actually remained our customer, which means either they have upgraded or they have continued to use the car. There's hardly been a person who's once driving a leasing car has gone back to owning. I mean, that in my entire career also, I haven't seen many people. Once you start driving with that comfort and with that kind of a thing, you really don't want to own a car.
If somebody surrenders a car, then what does it get reused in the platform, or do you sell it, or like?
It gets redeployed. It gets redeployed. It comes back to us. It is refurbished once again. It is cross-checked for every parameter. And based on that, if it is ready for deployment, it is up on our inventory list, and our sales team is free to redeploy that car.
So what is the role of technology in this business? Like, what are the touch points where technology can make an impact?
So the user journey, basically the onboarding of the users, the entire thing remains with tech only. From the partnership perspective, so what we are building to our workshop partner, to our dealer partner, so we are giving them enabling basically a dashboard kind of thing where they can simply upload their inventory. We have our in-house inspection team basically do the vehicle inspection. So the dealer gets a verified report of their vehicle also, which they can use for their sale purchase also. The workshop partner gets a regular business with PumPumPum. They have a clear cut understanding of which car coming mapped with that workshop, so that the repeat job can also be assigned to those workshop only. Then basically there is an IoT device which is enabled in all the car, which is it's a GPS enabled device which help us monitor the vehicle health also and the user behavior also. Okay, so the kilometer can be monitored on a monthly basis. The driving pattern gives us the indication whether a user is good driver or a bad driver or a register. So those are the things which are basically we have also created a driver score also. That is right now for internal use also. So our system knows that okay, it's a good driver, bad driver. We can actually give out incentive to good driver also, and bad driver we can keep a watch on those people. And initially, we used to put the OBD device, there's an onboard diagnostic device, which used to give all the health parameter, like your engine temperature, your vehicle, like performance parameters, whatever things you see on your dashboard, everything. So gets monitored in real time. So our idea is to use that device to basically get on a preventive approach in terms of vehicle maintenance. So instead of some minor issue which can possibly leads to a bigger issue, ending up with a high amount of repair and maintenance, we can actually identify issues at source and rectify the issue without ending up high spending on the service and maintenance. So, but the challenge that we face in the OBD device, that the current OBD device are majorly designed from the fleet operator perspective, which are only wants to do the geofencing or the driver monitor, but they are never designed from a retail or an individual perspective. And the compatibility of these devices are also not very friendly. So what we have seen, even we have tested one of the best ones, but they are not compatible with all the cars. They are compatible with 50-60% of the car. So that is where what we have done, we have stopped uses the OBD device till time be able to receive good amount of funding, so that we can deploy some funds on the R&D side of the OBD device, which we can create for our own purpose, which can actually enhance the user safety, enhance the vehicle performance also. User are unnecessarily getting stuck on some highway. It's better if he gets update of some possible which can lead to a issue. So idea of our technology is to make the vehicle fully kind of like tech enabled. So anything, it's a car. The car can go wrong. But our idea is whatever the best form of technology we can use, so that the user experience remains seamless throughout the use.
Like if there is a breakdown of a vehicle, then the user will just call you and then it's your responsibility.
Absolutely. There is a 24/7 roadside assistance already available. He can just, car can be towed to the nearest workshop and he can go back home safely. So that's not an issue. Everything has been bundled into the price that we've already done for it as the end price. So idea is, it's not only about max, it's not only about financing, it's not only about risk, it's also about convenience. I mean, there is a huge amount of convenience wherein we've also seen, especially a lot of interest from women drivers. I mean, generally women who are traveling, students who are traveling. Once they get stuck, it's a beautiful model wherein you don't have to take a risk on anything, and your usage is very very limited and for a very limited period of time as well. So that is where this entire bundled offering takes really makes a lot of sense for the end customer.
What is your fundraise pipeline looking like? So that seems to be like the key unlock to really grow 10x, right? So what is that pipeline looking like for you?
So currently, I mean, basically the market scenario, like the funding plans, we have taken this decision. Okay, maybe for 6 to 1 year, we remain focused on our core parameters. We want to make this entire piece right before we scale. We are continuously focusing on the profitability. So we are already EBITDA profitable. So funding in this kind of business is not, so we are not burning a lot of money. So technically for our current business, we don't need good amount of funds. What we are planning maybe for a year to focus on the profitability and to scale in our current territories, so that once the current market scenarios, they recover the kind of amount and kind of valuation that we are seeking. So we are planning to use our ask at the right time when the market conditions are upward. And unlike the burning models, we don't have to rely on the funding. So that is one key approach we always take internally. Ki if a single car is not making money, then it's better to keep the car idle. We never give out any car if it gives me a burn or a use.
And actually, this time also gives us the opportunity to assess the risks that the business carries. We are continuously monitoring the risk and also taking steps, both in terms of operational efficiency and compliance, to cover our risks as far as possible, so that once we grow, we only have the focus on growing and nothing else. Rest, everything is sorted out. So this gives us a wonderful opportunity for the next 6 months to 1 year to do that.
Okay. So you mentioned about a plan to reduce the risk on your books. I'd love to learn more about that.
Yeah, see, it is still under process. So what really happens is, we are looking at a model wherein the end risk, the way we have just done for leasing for ourselves, is something that is also passed on to the lenders in the retail sector as well, right? So which means we don't have to worry about scaling up. It's an individual to individual risk that the lender takes. But that's still under process. I believe actually it will be too early to talk about that. But yes, that's a model building, which obviously will shape the future of going into the retail and will also pave the path for us going into retail in future.
That would essentially be like a matchmaking service. You would find a lender who's willing to, or an investor who's willing to fund the car for a particular buyer profile. And you would probably have some sort of a platform fees for enabling that matchmaking, plus the maintenance and all the operational work that you will do, something like that.
When we said our core will always remain to us, we will be underwriting the car. I mean, we will be taking the risk on the ownership. It's just about a matter how we can scale retail and in which the risk can be spread from the financial perspective. That's the model. Rest, everything will remain the same. There's nothing that's going to change for the.
The idea of spreading the risk rather than taking by pump will pass on the risk to the lender. So the lender can be many, well, like maybe a HNI bank, private limited individual, whoever wants to put money. And there are people who are planning to buy car, take a loan, leasing, subscription. So we that's very long vision. But idea is okay. Right now people were planning for a 2 year, 3 year subscription. There is a partner simply. There is a matchmaking, and basically basis that, and we give the user summary. Okay, it's credit, everything is there. If there are some user credit score is low, our system can show you, okay, someone is saying, okay, I can give a loan 24-25%. A person wants to accept, so we become a platform for that kind of aggregator, and without us bearing any risk. And we keep our service maintenance, everything insured, so that our lender know that asset is secure, and our customer also knows कि, okay, the asset basically taken care by.
So you said you're focused on profitability. Give me like some breakdown. Like say we talked about that Swift 2015 example where you would charge 19,000 per month. What would be the profitability for you in that? What would be your cost in that?
So basically on a monthly basis, we make something around 15-20% kind of operating margin on a month-on-month basis. That is basically from as a combination of our financial cost plus service maintenance cost, the insurance component that we factored in. And then there is a 5-10% kind of margin we make on the resale of the vehicle. So for example, let's say after 2 years, if I decide to resell the car, so the residual value that we factor in, that they are generally lower, 10% lower to the expected market resale price. Okay, so then that is where we make some of our money as a margin. So in total, if you look at, but if I accumulate the entire my sourcing margin, procurement margin, or my resale margin, and along with my service maintenance insurance, so we are making a 25-30% kind of gross margin on a month-on-month basis.
Okay. How do you offer service maintenance pan India? Like that would be pretty expensive, right? Like you said, roadside assistance. Is it through third party tie-ups or?
Yeah, it is true. See, companies like us thrive on partnership models. So thankfully, in the used car space today, you have a lot of people who are aggregating a lot of workshops pan India. So just to give you an example, today as we speak, our cars are running in almost 50 cities. We are managing, even though we are sourcing customer only in Delhi and Bangalore, but my customer base is in almost 55 cities spread across the length and breadth of the country. And we've been managing it beautifully. I think the Google rating says it all. We've been rated at 4.7 as amongst the topmost leasing player in terms of customer service. So the partnership model is something which is working very well for us. It doesn't put us into drain of any capex. It's a pure opex. It is based on need. And there are terms and conditions which are pre-agreed. There are turnaround times which are pre-agreed. And it's a pretty standard practice in the leasing industry, how we work.
So I'm guessing someone like a Go Mechanic might be that aggregator of workshops that you would be working with too.
There are people like Bosch, there are people like Pit Stop, there are people like Go Mechanic, and then there are obviously authorized players as well. There is authorized workshop network from the OEM, which we also have.
Leasing from a core logic also always, so starting this business model 5 year back was difficult because of these infrastructure was not very organized. Why we start this model or make sense now? Because now buying selling of vehicle is not a challenge. You can buy car from Car 24 digitally real time in like 30 minutes. Previously the entire buying selling was offline. Like, so creating a model, so the service maintenance kind of like home mechanic, these kind of player have created a layer. Your insurance companies, digital insurance companies created a layer. So leasing is basically a bundling of all the organized layers which are there in different pieces. We club it together and we bundle it, offering a single solution to the end customer. So that's how the leasing always makes sense.
Got it. Okay, amazing. So essentially today the leasing business is more about financial engineering and being able to do good financial engineering than about operationally heavy kind of workloads. And if someone was to like end in the middle of the lease, like you said that somebody got a job change and had to change cities or whatever, then
So we have a very flexible tenure. What generally leasing is like funding traditionally, right? So if you were to foreclose a lease, I mean, it is like foreclosing a loan in which there is a market value, there is a penalty, there is an outstanding book value, and there is a market value of the car, which God knows what is right and what is wrong. Whatever leasing company says is right. But with us, we have a very specific foreclosure terms, which says beyond a certain lock-in period, you can foreclose the car. However, you need to pay me X number of rentals. The rentals are fixed. So a person upfront knows what he needs to pay. Now I can go ahead and waive that off if that person goes to another city and takes another car from me. So it's a flexibility that we provide.